Chimerica is a term coined by the historian Niall Ferguson in late 2006 to describe the relationship between China and the United States. In an article in The Telegraph in March 2007, Ferguson wrote, "Think of the United States and the People's Republic, not as two countries, but as one, Chimerica. It's quite a place. Just 13% of the world's land surface, but a quarter of its population, and fully a third of its economic output. What's more, Chimerica has accounted for around 60% of global growth in the past 5 years. The relationship isn't necessarily unbalanced, more like symbiotic. Chimericans are savers, East Chimericans are savers, West Chimericans are spenders. East Chimericans do manufactures, West Chimericans do services. East Chimericans export, West Chimericans import. East Chimericans pile up reserves, West Chimericans obligingly run deficits, producing the dollar-denominated bonds that the East Chimericans crave. As in all good marriages, the differences between the two halves of Chimerica are complementary. Of course, many economists fret about the global imbalances associated with China's rise. Yet there's another way to see these supposed imbalances, as no more worrying than the doubtless very large imbalances between, say, California and Arizona," he wrote. Ferguson is a very good historian, not such a good economist. When the global economic crisis erupted in 2008, he came to realize that these supposed imbalances were not only unsustainable, but also that they had played a leading role in bringing about the crisis in the first place. Even though Ferguson's original ideas regarding Chimerica were flawed, I believe much can still be learned by analyzing the evolution of the US-Chinese-Chimerican economic relationship. That's what we're going to do in this video. So, how did Chimerica emerge? Following the collapse of the Bretton Woods International Monetary System, Chimerica emerged in part naturally as the result of market forces, political developments, and technological advances, and in part due to coordinated US-Chinese government policies designed to bring it about and support its growth. The breakdown of the Bretton Woods system meant that trade between nations no longer had to balance. It also meant countries were free to print their currencies in order to manipulate their value, to make their exports more competitive. The end of the Cold War in 1989 changed the US government's attitude toward China. Consequently, the US became willing to accept Chinese imports. Technological advances in communications, such as the fax machine, and in logistics, such as containerization and shipping, made manufacturing on the other side of the world feasible. Competitive pressures drove US corporations to relocate their factories to China or face annihilation from their rivals who did. US businessmen who sought to drive down their wage expenses and push up their profit margins put pressure on Congress to allow free trade with China and to ignore China's currency manipulation. US bankers used their influence over the US Treasury Department to support Chimerica. Some would say that US bankers captured the US Treasury Department, remembering that Robert Rubin came from Goldman to the Treasury and then went on to Citi. And Hank Paulson also went from Goldman to the Treasury Department. And the bankers also applied pressure on Congress through very large campaign contributions. All right, so this chart shows the exchange rate between the yuan and the dollar going back to 1981. And as you can see, China devalued and devalued and devalued its currency in January 1994 alone, there was 150% devaluation. So China devalued its currency until it was the most competitive manufacturing base in the world. Thus, Chimerica was born. The US government could have imposed trade sanctions in retaliation, but it didn't, because US industrialists and bankers wanted Chimerica to happen. And so here you see the US trade deficit with China from 1985 to 2015. It went from 0 to $360 billion a year. So West Chimericans became the spenders and the importers. And this is the same thing shown the other way. China's trade surplus with the US from 0 to 360 billion. And East Chimericans became the savers and the exporters. This chart shows the cumulative trade surplus, China's cumulative trade surplus. In other words, adding all of these together from 1985 to 2014, nearly almost $4 trillion. So East Chimericans' savings originated in China's massive trade surplus with the United States here. And they originated with the printing of $4 trillion worth of yuan by the PBOC. That's what you can see in the green line. This green line shows China's foreign exchange reserves. Here are the cumulative trade surplus, and here are the foreign exchange reserves. You can see they are closely associated. So, in other words, China's central bank saved $4 trillion by printing it from thin air. Money printing by the People's Bank of China and other central banks explains why there was and still is a global savings glut. So China's central bank printed yuan and used them to buy mostly US dollars to hold down the value of the Chinese currency. And so China accumulated the equivalent of more than $4 trillion in foreign exchange reserves that way. And I estimate that 75% of those reserves are in US dollars as opposed to other currencies. And as China accumulated those dollars, it invested them in US dollar denominated assets like government treasury bonds, Fannie and Freddie debt, corporate bonds, and stocks. And those investments pushed down US interest rates, thereby facilitating the growing indebtedness of US households, and so playing a leading role in blowing the US into an economic bubble. Thus, East Chimericans became savers, West Chimericans became spenders. East Chimericans do manufactures, West Chimericans do services. East Chimericans export, West Chimericans import. East Chimericans pile up reserves, West Chimericans obligingly run deficits, producing the dollar-denominated bonds that the East Chimericans crave. That's how Chimerica emerged. So now let's consider who benefited from Chimerica. In China, just about everyone benefited. Nearly all the senior Communist Party officials became very wealthy. A Chinese billionaire class emerged, and a large Chinese millionaire class emerged. A middle class emerged and grew in size to hundreds of millions of people. And hundreds of millions of the poorest people benefited from being able to work in factories or factory-related jobs instead of farming jobs in the countryside. The only real drawback was the severe environmental degradation in China. Who benefited in the US? Okay, well, the US capitalist class benefited. Factories were moved to China to take advantage of the very cheap labor there. As the cost of labor fell, corporate profits rose. The share of profits going to capital increased, and the share of profits going to labor fell. Bankers benefited by financing the rising US debt levels. Those people who owned assets benefited. The lower cost of production in China caused inflation in the US to fall. Disinflation pulled down US interest rates. Falling interest rates pushed up asset prices, like stocks and property. So those who owned assets benefited, and the wealthy benefited most. Potential home buyers also benefited. Lower interest rates made homes more affordable, so more people were able to buy houses, particularly with the assistance of Fannie Mae and Freddie Mac. All U.S. consumers benefited from falling product prices due to the low cost of manufacturing in China that resulted from the ultra-low wage rates there. The U.S. government benefited because it was able to finance its borrowing at very low interest rates due to disinflation and the PBOC buying of U.S. government bonds. The U.S. State Department also benefited. The very large U.S. trade deficits with China bought China's friendship, or at least its lack of hostility to most U.S. foreign policy initiatives, such as the first Gulf War and the subsequent U.S. invasions of Afghanistan and Iraq. But who lost in the U.S.? Blue-collar workers lost their high-paying factory jobs. Deindustrialization put downward pressure on the wages of the largest part of the population, since those who had worked in factories had to find other jobs. Consequently, U.S. wages stagnated for decades. However, to a large extent, rising asset prices created a wealth effect that allowed those who owned assets to keep spending, even though their wages were depressed. And the wealth effect and the spending by the wealthy created more service sector jobs for those who could no longer work in factories. Unfortunately, most service sector jobs paid less than the factory jobs had paid. So here you can see the 10-year U.S. government bond yield going back to 1980. From around 1982, it fell and fell and fell, and is now roughly 1.5%. So U.S. interest rates fell as cheap imports pushed down inflation, and as the PBOC and other central banks bought U.S. government bonds, pushing the price of those bonds up and the yield on those bonds down. All right, so how large is Chimerica? Here we have GDP, the U.S. in blue, China in red. In 2014, U.S. GDP was 17 trillion, Chinese GDP was 10 trillion. Add them together and we have Chimerica GDP at 28 trillion US dollars. Now, Chimerica's share of world GDP. So the US GDP is 22% of total world GDP. China's GDP is 13% of world GDP. Add them together and that means Chimerica's share of world GDP is 36%, more than a third. This shows investment by the US in blue and China in red. Investment means investment in infrastructure, factories, residential buildings, all kinds of fixed capital, gross fixed capital formation. You can see investment in China is considerably higher now. It has overtaken the US in the last several years and is now much higher. In China, it's $4.6 trillion. In the US, it's only $3.2 trillion in 2014. And here's the share of world investment. The US share is 17% of world investment. China's share is 24%. Chimerica's share is 41% of all investment occurs in Chimerica. Now, household consumption expenditure in the US and China. In the US, consumption is $12 trillion. In China, it's only $4 trillion. Now this, above everything else, in my opinion, is the reason the United States is still more powerful than China. Higher US incomes allow Americans to consume 3 times as much as the Chinese, even though there are 3 times as many Chinese as there are Americans, or more. So the share of world household consumption, America's share is 27%, China's share is 9%, Chimerica's share is 35%. So it invests 41% of world investment, but it consumes 35% of world consumption. Now here are exports and exports for the US and China. China now exports more than the US does, 2.5 trillion versus 2.3 trillion. But the US still imports considerably more than China imports. The US imports 2.9 trillion and China imports 2.2 trillion as of 2014. Now we have total credit. You can see total credit, US credit in blue, China credit, total credit in red. So total credit in the US is $63 trillion. Total credit in China is 21 trillion. Actually, it's somewhat higher than this because this number is for aggregate financing. Aggregate financing doesn't really capture all of the credit in China, but this gives you some idea of the difference in the amount of credit. But keep in mind, just as with consumption, the Chinese cannot afford to pay interest on so much credit because Chinese income is so much lower than American income. That's why the Americans can consume more, and that's why the Americans can afford a much higher level of debt than the Chinese can. Now, adding American and Chinese debt together, we have total credit for Chimerica, $85 trillion. And this shows the assets of the two central banks, the Fed and the People's Bank of China, combined. Notice that, so this is Chimerican money printing. Notice that it increased between 2000 and 2014 by $9 trillion. $9 trillion of fiat money creation. That was money printing on a truly extraordinary scale. Keep in mind that the Fed only printed 3.6 trillion after quantitative easing started. So this money printing had an extraordinary impact on the global economy. But then things changed. The capital inflow from China blew the US into a bubble, which was fine as long as it lasted. But then the bubble popped in 2008. Now the US households can't take on more and more debt as they used to. So the US is not able to keep up its end of the Chimerican deal by rapidly increasing its imports from China every year. If the US can't buy, then China can't sell. The US is verging on deflation, so the downward pressure that the cheap Chinese products put on prices is no longer desirable. Also, US interest rates have fallen so low, 1.5% now on the 10-year government bond, that a further drop in interest rates is considered unhealthy, since it could cause another destabilizing asset price bubble. So the US government is no longer so keen as it used to be to have the PBOC buy US government bonds by printing yuan and buying dollars as it did. China's military power has been growing in line with its economic power. Over time, the US State Department and the US military have come to see China's growing military power as a threat that more than outweighs the benefits the US had derived from China's lack of opposition to US foreign policy initiatives. These US military concerns have dampened the United States' enthusiasm for Chimerica. And also, a political revolution has begun in the United States. Those who have been harmed by Chimerica are now fighting back by voting for Trump and Sanders. This backlash could be the end of Chimerica. China has grown so large that the United States is no longer big enough to meet China's needs, especially since US economic growth is now so weak. This changes how China feels about the US. It doesn't need the US the way it once did. Finally, the very aggressive stimulus measures China took to keep its economy growing after the US crisis started have destabilized China's economy. The Chinese bubble is now in danger of popping. China may have to adopt measures that are contrary to US interest, like another very large devaluation of its currency or military adventures abroad. So to some extent, China and America have reversed roles, or at least their roles have become blurred. China ramped up its borrowing to drive Chinese growth. So Chinese credit growth and economic growth became larger than US credit growth and economic growth in absolute terms. The Fed joined the PBOC in printing extraordinarily large amounts of money to finance US government debt. Okay, so once again, this is China's trade surplus with the US, $367 billion in 2015. This shows the annual change in the trade surplus. Notice it is growing much more slowly than it used to. It used to grow 25, 45, 30, 26, 31. Now it's growing 1.86% a year. And this shows US imports from China. Last year, the US imported $483 billion of goods from China. That was a 3% increase on the year before. So US imports from China are no longer increasing the way they used to. And so the US is no longer as helpful in generating economic growth in China as it used to be. Much, much less so. This shows Chimerica total credit. And this is the breakdown of Chimerican credit between US credit and China credit. This is the year-on-year change in credit. US credit in blue, China credit in red. So before the crisis started in 2007, US credit grew by nearly $5 trillion that year. But once the US bubble blew up, credit stopped growing and contracted a bit. It's now, once again, last year it grew by less than $2 trillion. But look what happened in China. China ramped up its credit growth massively to the point where in 2013, Chinese credit growth was nearly $3 trillion. Now last year it looked smaller, but this to some extent was due to the Chinese devaluation. So notice 1, 2, 3, 4, 5, 6 years, China's credit growth in absolute dollar terms was more than the US. So US credit growth used to be the driver of the Chimerican economy. But after the US bust, China was forced to ramp up Chinese credit to prevent economic breakdown in China. This shows the annual change in Chimerican credit, the annual percent change. Only 4% growth last year. So even with much more Chinese debt, credit growth in Chimerica is very depressed by past standards, and it's likely to continue slowing. Now this is the breakdown of the assets between the Chinese central bank and the US central bank. China in red, the US in blue. Notice that at this point, in mid-2008, the PBOC's assets were 3 times larger than the Fed's assets before the Fed launched QE. But now, they're only 10% larger than the Fed's assets. So the Fed's willingness to print money means the United States is no longer as dependent on China to finance US government debt as it used to be. Again, we've seen this chart before, a $9 trillion increase in Chimerican's paper money between 2000 and 2014. This shows the year-on-year increase in the total balance sheet of Chimerica, the central banks of Chimerica. Last year, the total combined assets of the Fed and the PBOC combined contracted. Now this chart is interesting. We have 3 lines showing nominal GDP growth, the annual percent change. Chimerica in green, the US in blue, and China in red, the annual percent change in nominal GDP growth. So back in 1970, China's economy was so small, it really had no impact on Chimerican economic growth. You can see that the blue line and the green line move very closely together because America made up all of Chimerica at that point. But as time went by and as China's economy became larger and larger, now you can see there's a much larger gap between Chimerica's growth and US growth because it's being driven now by Chinese economic growth This shows the annual dollar change in GDP in nominal terms for the US and China. The US in blue and China in red. So US GDP used to always grow at much more in dollar terms than China's GDP. But after 2008, that changed. Since 2008, China's GDP has been growing more than US GDP every year in dollar terms, not just in percent terms, as it has done for a long time, but in absolute dollar terms every year. This shows Chimerican exports. Notice they contracted last year. And this shows the breakdown between US exports and Chinese exports. So between 2008 and 2015, US exports grew by 218 billion, or 17% in blue. But Chinese exports grew by $850 billion, or 60%. This shows Chimerica's exports, the annual percent change. Well, last year they contracted by 4%. Now, Chimerica's imports, also notice they contracted last year. And this shows the breakdown between US and Chinese imports. So between 2008 and 2015, US imports increased by $146 billion, or 7%. But Chinese imports grew by $550 billion, or by 48%. And that's even after the big contraction in 2015. So you can see what an impact this growth in Chinese imports would have had on the global economy. More of an impact than this much smaller growth in US imports. And this shows the annual percent change in Chimerica's imports. Well, they dropped by 9%. They contracted by 9%. The 9% contraction in Chimerican imports in 2015 dealt a very severe blow to the global economy. So the last few charts have shown how important growth in China was to Chimerica and the world after the crisis of 2008 started. China surpassed the US in both credit growth and economic growth, not just in percent terms, but in nominal dollar amounts. China became the driver of Chimerican economic growth, but now the China boom is beginning to bust. As we saw in the third and fourth videos in this series, China is facing funding constraints and extreme excess capacity across all its industries, relative to domestic purchasing power and also relative even to global purchasing power. So China's economic model of export-led, investment-driven growth is now in crisis. US credit growth is weak, and Chinese credit growth is going to weaken. Therefore, there won't be enough credit growth to drive Chimerica. Already, as we just saw, Chimerican imports and exports have begun to fall. China's economy is a very large economic bubble. The chances are high that China's economy will stop growing, and there's a real possibility that it will shrink, and perhaps shrink significantly. With China now slowing sharply, and the US unlikely to rebound, Chimerica is shifting from being the driver of global growth to being a drag on growth and a source of destabilizing deflation. Making matters worse, global trade tensions are increasing due to a grassroots backlash against free trade and globalization. Chimerica is in danger of going into severe recession. If that happens, the chances of a Chimerican divorce involving trade tariffs will increase. If a US-China divorce occurs, a global depression will follow. Even if a worst-case scenario doesn't play out, it's difficult to see what will drive global economic growth during the years immediately ahead. Large-scale fiscal stimulus is the last card we have to play if a protracted slump, or worse, is to be avoided.